We have with us tonight David Breuhan. David is well known to the conservative movement here in Detroit. In fact, Joe Katz, who sits with us and was the person who ran the First Saturday Society for a dozen years before this group started out, worked with David on building a coalition to defeat the Bush steel tariffs, which unfortunately passed and actually destroyed much of the auto industry and the steel industry. So David's been around for a long time. Dr. Breuhan has been around for a very long time. And he today is politically. 10 years is a long time politically.
Thank you. Yeah, that's true.
He is Vice President and Portfolio Manager with Gregory Schwartz and Company in Bloomfield Hills. For the past 19 years, he has managed corporate retirement plans and individual accounts for high net worth clients. He earned his Bachelor of Science degree from the United States Military Academy at West Point and a Master's of Science degree from Walsh College. Following completion of airborne and ranger training, he led soldiers as an officer in the United States Army. He served as B Troop Commander in the 3rd Armored Cavalry Regiment in Operation Desert Storm. He taught graduate school at Walsh College, and he has been published in the Wall Street Journal, the New York Times, Barron's, the Detroit News, Infantry Magazine, and Marine Corps Gazette. He has lectured at West Point, Georgetown, Hillsdale College. He has appeared on Neil Cavuto, National Public Radio, and Bloomberg Radio. He has briefed the Vice President, members of Congress, and the United States International Trade Commission. His book is entitled Spread the Wealth, more haves and fewer have-nots. I'd like also to say that he studied economics under Harry Greiser at the University of Detroit Mercy, which is the only graduate school in the United States that teaches Austrian economics. David has spoken frequently at groups around the Detroit area about economics, and he is highly regarded as an articulate speaker. Before he speaks, however, we have Darren Moore.
So if you understand the government wedge and you understand the marginality, then you can begin to understand why it is that businesses that are on the bubble, when new regulations come in, all those businesses on the bubble are no longer profitable because now the margin has shifted on them and they are now unprofitable and they go out of business, as do all the people that work for them go lose their jobs. So the Austrians have a far better way of doing it, and with Jay's permission, I'll just go ahead and turn it over to David Breuhan, who is the real expert and the author of this outstanding book. I must say, I've read a lot of books. Spread the Wealth it's like 100 pages. It's a great place of how we got here. It's a great book that explains 17 great principles, and then that everybody should know. But it's a very easy read. So I give it to you folks. David Breuhan.
Jay, thank you so much for the invitation, and Darren, thank you very much. I could listen to you for an hour. What's even better is you went without notes. That's impressive. Really good. I have to use notes as I've been here a while, as you said. I have a cute story. I had a client that had an event that he took his son to golfing. Any golfers in here? A few that understand the game? And weather threatened, but it never rained, and in short, there was nobody behind us and nobody in front of us. We owned the course. About the 3rd hole, we were putting, and he asked his son, "Buddy, what do you like most about golf?" And his son said, "The surprises, Daddy." And I looked at the little boy and I said, "The surprises?" And he goes, "Yep. Every time you guys hit the ball, it's a surprise." So I was asked to talk about the book, but I thought it would be informative to kind of give you all a brief overview of what's going on in the economy today, especially with respect to the emergence of Obamacare in full force, which is a great surprise. And I've entitled kind of the overview, A Year of Surprises, and then we'll just talk about the book. And feel free to interject with questions at any time. Discussions are always better than lectures, and as an instructor who taught at the graduate level between 6 o'clock and 9:30 at night, when dinner consisted of an Advil and a Coke, For most people, it got up at 6. I'm a firm believer that the mind can only absorb what the bottom can endure. So I will be concise, brief, and to the point, so we can visit afterward. I was listening to National Public Radio. I know some of you are horrified. I also read the New York Times. On the way over, and there was a comedian that was being interviewed, and he said, the conservatives had it all wrong. They didn't have to shut the government down to shut Obamacare down. All they had to do was wait for the date and the website, it shut itself down. It was hilarious. So it's true, switch on, and I'm sorry it wasn't like going on Travelocity or going on Amazon to order something. That is and continues to be a disaster. So that's an idea of a rather large wedge that the government has created between what's possible and what's not possible. I'm sure they'll fix it, but you're going to lose a lot of what is being entitled the millennial generation, because these folks are used to fast, efficient, and correct. And if you tell them, I'm sorry, it's not available for another month, and they try in a month and it's still not available, you're going to lose the younger people with nothing wrong, who are going to pay for the older people with a lot wrong. And this thing will collapse upon itself. As Darren mentioned, that this thing rolled out at 3,000 pages. That's the initial bill. The regulations that have been yet to be written by the organizations that don't know what to do yet could be 30,000 pages. So that's something that is going to require more than a soft drink to discuss later. So it's been a year of surprises. People ask me what I do for a living. I say I manage what's left of everyone's money after 2002 and 2008. In the beginning of the year, people asked, what do you think about the market? I said, it's probably going to be up high single digits. But to give you an idea, as of yesterday's close, the Dow Jones Industrial Average, which is the largest 30 stocks in the Dow, is up 21%. Year to date, the S&P 500, the largest 500 stocks in the exchange, is up 25%. And the Russell 2000, which is the small company stocks, on average is up 30. That's amazing. Now, about a third of that, and it's only me guessing from the weeds here in the Detroit area, about a third of that is due to the Federal Reserve printing money. And Paul Ballou, who is a brilliant economist that taught me 3 of my 15 classes in econ, Paul worked at the Fed, and now I think he's a chief economist for Nationwide, said that the Federal Reserve is a very powerful institution. And I've coined the phrase, when the man with the $1 trillion fire hose tells you to buy stocks, you better buy stocks. Because they're buying $85 billion of their own debt a month between mortgage-backed securities and treasuries, and the market is on fire, but earnings are still reasonable. So earnings, what supports the actual price of the market, when you look at the PE ratio, the price over the earnings, on the S&P 500, historically is 16 times earnings. Today, the S&P is at 16 times earnings. When you look at next year, it's at 15. In 2007, when we were at one of the bubbles, it was 19 or 20. And in 1999, at the height of the tech bubble, it was 27 times earnings. So people say, well, is there a bubble in the market? Well, you have to remember farmers' math. If you have a loss of 50% or 40% in the Dow in 2008 and 2009 from peak to bottom in 18 months, you need to double that return just to be where? Back where you started. So if you have a 50% loss, you have a 100% gain to get even. A 40% loss, you need 80. So you have to look at, is it high? Absolutely. Yeah, it's high absolutely because we're about 15,700 in the market. But relatively, you were at 14,003 in 2007. So we're not that much higher. And the good news for those of you who are dependent on pension plans, your 401ks, and have individual mutual funds and stocks and bonds, it's never been a better time to be an investor. Now, I'm as libertarian as you can get with respect to, I don't think the Federal Reserve does a very good job, because a dollar today or a dollar in 1913 is only worth 7 cents today. I'm sorry, that's not price stability, and that's your major charge as an institution, was price stability, and they have not accomplished that. That being said, it's a great time for you to be an investor because corporations in United States history have never been in better shape. Why? Well, one, they're scared to death. They are. They don't know what this healthcare thing is going to look like. They got all ready to implement it, and the government said, well, in July, never mind. There was an interesting article in the Wall Street Journal a couple weeks ago where the author summarized that between January of this year and July, net job creation for full-time jobs was actually negative. What was positive was there was about 800,000 part-time jobs that were created. And the magic number for small business is 49 and 29. 49 employees or less, you don't have to have Obamacare. 29 employees or less, you don't have to pay any benefits at all. You can 1099 them. So companies are not going to grow like they can. They're just going to pay their people more and work them twice as hard, but not go over those limits because of decisions made on the margin. What is the marginal cost for me to hire the 50th worker? Well, then I have to give everybody below them Obamacare. I'm not going to do it because of decisions on the margin. It's just rational decision making. So, what does that mean? Well, the two biggest costs of an employer are payroll and taxes. You can't cut your taxes, so they're going to cut their payroll. It's a very simple argument that somebody can figure out on a Saturday as far as, boy, I really can't hire anybody, we're just going to have to get more efficient. So, they're going to spend money on technology, they're going to look at 1,000 resumes, and they're going to hire 3 people. That's terrible for the Republic. If you read Rousseau's Social Contract and you believe in the decency of human beings toward each other, there's a lot of people suffering. Unfortunately, the administration has pursued policies that are really not progressive, they're regressive. So you have created a greater divide between the haves and the have-nots. Remember the famous Clint Eastwood speech at the Romney nomination in the last presidential campaign with the chair? But the most interesting thing that he said that was true, that I thought was the funniest, was when Barack Obama, then the president-elect, gave the big speech in Chicago, and everybody was crying. And, this person was crying, and his wife was crying, and Oprah was crying, and, the Republicans are all roaring because it was hilarious. But there's more people crying now because what you've done based on the policies of the administration, the Federal Reserve, is you actually made more rich people. Because people with assets that were told to buy stocks by the Federal Reserve have pushed their money in the stock market. Pension funds, hedge fund managers, and the top 5% of the people are all in the market. The general public is not in the market, which makes me think it's not a bubble, because after having been burned in '98, in 2002, and 2008, the general public is scared to death of stocks in general. So what are they doing? Especially the retirees and people in fixed income are making zero because they have their money in the banks. I went to a local bank, I won't mention it in case this is rebroadcast. The 10-year rate on a certificate of deposit was 1.25% for 10 years. So what you've done in your policies is you've created a bigger divide, and you have more have-nots, which you campaigned against in 2008 to attempt to bring the country together. If you want to talk about a landslide, we always mention Ronald Reagan, but if you want to talk about a landslide that nobody really realizes, because now with the generations, everybody's on Twitter and Facebook, and history was yesterday and the future is tomorrow. Bring up the electoral map of the United States in 1984. That is a landslide. Because Walter Mondale only carried the District of Columbia in the state of Minnesota. The entire country went for Ronald Reagan. That was amazing. And we're not close to that. Also, from a practical standpoint, as a U.S. citizen, having served more years abroad defending our interests than at home, it's a shame that Ronald Reagan cannot invite Tip O'Neill over for a whiskey after hours to settle things like that. And a lot of that is due to the fact that people in Washington don't live in Washington. They're there Tuesday, Wednesday, and Thursday, maybe Friday morning. They fly out on Friday and come back on Sunday or Monday morning to meet the roll call votes. So there isn't any socializing going on. I could fix things in Washington, I think, in a good week. I'd start mid-Wednesday, I'd take them all golfing, get them absolutely plastered. I would put the most liberal Democrat in a golf cart next to the most conservative Republican. Let them sleep until 10. Serve them all omelets. Then you're into Thursday afternoon, have meetings, you're done by Sunday, and they would cooperate in DC and fix it. Because it's about human beings. But we are so polarized as a country that Jefferson's warning that democracies are often destroyed by fractionalism may indeed come true. So, but in general, we are running a plow horse economy, not a racehorse economy. We're still the best bet on the block. We're coming up on the sad anniversary of 50 years of the Kennedy assassination, and it was my favorite analogy of political stability and why people invest in the United States. And that is the question posed to some of you who may have been of age at the time, that everybody knows what happened on November 22nd of 1963, but some of you may not know what day of the week that was. Anybody know what day of the week that was?
Friday.
It was a Friday. It was a Friday. Does anyone know, and this is not related to a funeral or a service, or the Oswald assassination, does anybody know what happened on Sunday? And I'll give you a hint. It happens at 1 o'clock Eastern Time every Sunday in the fall in the United States at most major cities.
Air alert.
No.
No. Roll back.
I'm sorry?
Roll back.
Roll back. Time change, no. NFL football. NFL football, 1 o'clock on Sunday on the dot. And 2 days after the assassination of John F. Kennedy, we play football, which goes to where you are in the worldview for political stability. Most important leader, most nuclear weapons, what happened? Nothing. Well, something did happen. They had 1 minute of silence across the major football fields, and then they kicked off. Which is why we're still the best horse on the block with respect to why people, despite our $17 trillion in debt, continue to loan the United States money. Because you're going to be here. In April of 1865, at the McLean House in Appomattox Courthouse, Virginia, Robert E. Lee surrendered to Ulysses Simpson Grant, both graduates of the U.S. Military Academy. The next day, the graduates of West Point from both the South and the North had a reunion at William McLean's house and drank. That goes to who you are as a people. Everyone's worried about Iran getting the bomb and using it on Israel. I'm concerned they may use it on a different tribe, because the Sunnis and the Shia hate each other more, I think, than they do the Israelis. And that really goes to who you are as a person. Bush v. Gore. What did you do when the election was up? And it was on hold for 39 days to result. You all went to work. So that's what's unique about the United States, in that the best analogy I have ever heard, and the hope that we still have as a people, and the fact that you're gathered here tonight, and others do this in small towns and villages across the United States, is that, and you've probably heard this in conservative folklore, you can be born in Ireland, and you can go to Spain and you'll never be Spanish. Or you can be born in Italy, and you can move to Germany, but you'll never be German. But you can be born anywhere in the world, and you can come to the United States, and you can be an American. And that's something that I think, when things look awful to us as a group with respect to social issues, the debt, the Federal Reserve, Obamacare, that there is always a glimmer of hope in this country, that somebody like Reagan will come along in an instant and turn this thing on a dime. So it's important that you stay engaged in the movement and realize that even though the analogy's been made that the U.S. economy isn't doing so good, we're still the best house in the bad neighborhood with respect to our debt management, and we still work because of things that we have encapsulated throughout history. rule of law, generally free trade, currencies that are accepted around the world. Nothing in the world spends like a US 100, except gold or silver, which Ross Perot gave his emissaries to get his people out when they were taken and captured in Iran. I don't know if you knew that, but he gave his folks gold and silver to actually bribe their way across the border, which they had to do in Turkey, or else they would have been killed. So gold and silver always works, but I can tell you, having been abroad, nothing spends like a US 100. And as long as our dollar is still going to be accepted around the world, and we're going to be in good shape. I am often asked, because of our debt, what happens if somebody trumps us? And I kind of answer the question by elimination. Look at 4 countries that I believe could possibly replace the US dollar, and then why can't they? Well, we used to joke in Austrian economic circles that the Swiss did not need a gold standard because they just let everybody print around them. Well, a couple of years ago, when things got wickedly bad in Europe, the Swiss currency was in demand. And for the first time in almost 100 years, the Swiss had to print because they couldn't afford their own cup of coffee because everybody wanted that Swiss franc throughout Europe. It was unbelievable. So they devalued their currency by 30%. So that tells me you can't handle the demand. So you guys, even though we love you, you're off the table. Second option, China. Can't trust you. Plus, we can. I'm a big free trader, but you can't trust those guys because they steal your stuff and that violates the rule of law. So, in addition, I've been told that the currency markets open at 9:30. At 9:15 every morning, the Chinese peg to the dollar. So if you had to unpeg that currency to be free floating, I think it would knock them into recession. Plus, they don't tell the truth about their economic figures, and if you let them drink, they'll tell you so. They'll tell you flat out, we're just guessing, it's probably 3% growth, not the 9. And the 7% that they said, they had to revise it the next day because somebody brought somebody else in a room with 5 other people and rifles and said, you need to adjust that figure up about 0.5%. Okay, it's 7.5 today. Sorry, it wasn't us. Seriously, that's what they did. So you're off the table. The other 2 contenders, because of their natural resources, it all goes back to gold, folks, is Canada and Australia. And they simply do not have the float of currency that if they converted everything to Canadian or Aussie dollars, it could replace the US dollar. So, what does that mean for you? Thank goodness we found oil in Bakken and in California and in some of the deposits in Pennsylvania and New York, and we're actually using fracking and slant drilling. Or you'd be paying $6 a gallon for gas. Because if the dollar weakens, foreigners want more dollars for the same thing. And it causes imported inflation. All of these so-called Keynesians and hyper-educated elite people in Washington and the major Ivy League institutions are of the opinion that you can import your way out of a recession by printing money and devaluing your currency. But that's not true, because the balance of trade between countries, and this is radically different, and it's in the book in the Trade Concepts, the balance of trade by nature is balanced. There's 2 fundamental statements in business. There's an income statement where, unless you're in the government, revenues minus expenses equal net income. In the government, what happens is they spend more than they get in, so there's a deficit. So that's an anomaly. Most businesses operate at a profit. So that's called a P&L, profit and loss, or an income statement. And then there's another statement in business called a balance sheet. And I know everybody here is over 21, and you understand that I'm being very redundant, in that a balance sheet, by definition, is balanced. It's called double entry bookkeeping. So for every debit, there's a credit. It's called a T-chart. So if you use either starting at 100 and going to 0, or if you use something called pro forma, the balance sheet at the end of the day is balanced. So it is physically impossible, despite the rantings of everybody in the press, for you to have a deficit on a balance sheet. If we import $1 trillion from China, you pay for it. Or if you buy a television that's made in Japan or South Korea, there's no IOU on your television because you've paid for it. We learned about this during the Smoot-Hawley tariff. When Herbert Hoover was running, he wanted to balance the balance of trade, which is already balanced, because he wanted to help get the farm vote, just like the steel tariffs. Bush needed West Virginia and Pennsylvania to win the election in 2000. So he said, look, we'll give you this, but in exchange for the union votes, the union demanded tariffs. And we hammered imported steel to the point that domestic steel went up at the same rate the tariffs did, just below. And you nearly destroyed manufacturing in the United States because those contracts by local manufacturers with people like General Motors and Ford and Chrysler were 3-year contracts and they were fixed. In fact, they were worse than fixed. They mandated the local manufacturers cut their prices 5%. But if steel goes up 40 or 90 in some cases, and you're taking a price cut, you'll go out of business, and many good people did. So the idea that you can tinker with trade balances is archaic, but this type of understanding is taught at all universities across the United States, and it's why Ben Bernanke and Janet Yellen, who will replace him once she goes through the Senate and the votes pass, she's going to print, because they want to devalue your currency to try to export our way out. But we import more than we export. And all that will happen to you as a consumer is everything that's brought into the United States will cost more. You know what Forrest Gump said? Stupid is as stupid does. And you can't fix that. So in general, with respect to the economy, we're okay. But this president, unlike Reagan and some of the other presidents, has not talked about American excellence. He has not talked about the fact that the only ground that we asked for in France was the ground after World War II to bury our dead. He doesn't talk about the fact that more people come to this country as immigrants than the rest of the world combined. That you, despite all of our issues as a country, are still better off than many others, and we are a driving force for people that want to have hope. So it's interesting to watch this dynamic, in my opinion, as the United States becomes more polarized because of the absolute indiscriminate divisiveness of our policies. You can bring people together, it's been proven in your lifetime. So in sum for the economy, we're okay. Remember the numbers, 49 and 29. 49 employees, 29 hours because of regulations. And we are a plow horse, we're not a racehorse. So if you have a job, chances are you're probably going to keep it. If you are looking, you have to be very good at your craft because you're going to have to replace somebody that has become very tenured at their current employment. Market outlook, Peter Lynch used to say, I don't know what the market's going to do over the next year. I don't care. I just try to find good stocks. When you have a run like we have had over 4 years, trees don't grow to the sky in a straight manner. So it's usually in the capital markets, especially stocks, that you can have a pullback of 10 to 20%, and that's not a harbinger of recession. That's just quite normal for the markets to take a breather. If you were to ask me where the fear trade is, it's actually in the bond market. So many people piled in bonds in 2008 and 2009, and in my opinion, so few people own stock-based mutual funds. They're sitting in cash and sitting in bonds, that to me the bubble is actually the bond market, especially the government bond market, because everybody went there for safety. So if rates go up and bonds and interest rates are inversely related, those bonds can be whacked pretty hard. I don't attempt to manage portfolios by the fly, but I can give you a general rule of thumb that if you own a mutual fund and it's in bonds, look at the duration. The duration is the amount of time that a manager will hold a bond before they sell it. What you do to measure your own risk is if you have a bond fund that's out 5 years and rates go up 1%, your bond fund's going to go down 5%. If rates go up 2%, it's going to go down 10. So you take the duration of the portfolio, you multiply it by the rise or the decrease in rates, and that's the risk you have with bonds. Most investors in the United States do not understand that you can lose your butt in a bond fund if rates go up. Because they're of the opinion that, oh, bonds are safe. Yes, a bond is safe if you buy it today and you hold it to maturity, and it will come due at $1,000 per bond. But if a bond fund owns 5,000 or 10,000 bonds, they all come due at different times. So be very careful for those of you who have gone into the bond funds seeking safety. Look at your duration. If you want safety and you want bonds, make sure you're in, as we say, you pull a boat into harbor to avoid a hurricane. Make sure that you're into port 3 years or less. So if rates do go up, you won't lose double digits. You could still lose single digits, but be mindful of your duration risk. Most people have never heard of it, and I listen to these talking heads on TV, oh, you'd be in this bond fund, that fund. Oh my gosh, if rates go up, like they did for many people in 1994, the Fed raised rates 7 times, those bondholders got whacked really hard. So just be mindful of your portfolios. So that's a little bit on the economy, a little bit about the book, but we're still in good time. Don't worry, it's just water. I've never made that mistake. Like Jay said, I was educated by Harry Verizor. I went through Walsh's graduate program in 1993 and 1994. I had really great professors. Paul Ballou, Don Byrne taught me about public finance. Joe Weglar's a wonderful capstone course called The History of Economic Thought. Joe still teaches at U of D, and just from a personal enrichment standpoint, if you took his History of Economic Thought course, I used to call it going from Plato to NATO in 14 lessons. It is so well worth your time. He's a wonderful lecturer. He's been doing this his whole life and started his career managing money. It's well worth your time to learn about what does work and what doesn't in human history. Because we learned about Plato and Aristotle and Aquinas and Adam Smith, but we also read Karl Marx and John Stuart Mill and all the people who we don't think is quite right, including Maynard Keynes. So it's a wonderful course. And what those folks did for me is I served under a lieutenant colonel by the name of Montgomery Meigs. General Meigs ended up being the 4-star in charge of 7th Army in Europe, and his great-great-grandfather was the Comptroller General of the United States Army for the Union in the Civil War, and he was actually born in the state of Georgia. And Meigs said about all the Confederates, they were just damn traitors. So Monty Meigs came from a family of West Point graduates, was also a wonderful commander and a mentor to me as a lieutenant. And he told me that officers must possess intellectual curiosity. So my adage with respect to my education, I've been very, very fortunate, was West Point taught me how to think, and Harry Verizor's department taught me what to think about. And what that department did is it spurred intellectual curiosity as a formative economist in why are things so messed up when all these people have written all the stuff that's worked for 5,000 years and everybody does it backward in government and at Harvard and all the non-Austrian, non-monetary schools. And I still to this day as a 52-year-old citizen can't get my arms around the fact that Janet Yellen and the Fed are now going to print more money or do something different all the way out to the year 2017 when gas will cost $10 a gallon. So I still drive around even after written this book 3 years ago and lectured and attempted to do what I could as a citizen with really no political context. And it just reemphasizes the fact when I get asked to an event like this, I'm more than happy to give you my thoughts in the hope that we exchange ideas and somehow, some way, this thing can be broken loose, because I'm very fearful of the potential averageness of the United States when this country has always been about excellence. If you want to take one thing away from our talk tonight, and that is excellence is the exercise. That's what America has always been about. You've been about bringing excellence to this country with immigrants. You've been about free trade, the rule of law, stable currency, political stability. All the things that have worked throughout history are encapsulated in 2 great documents, the Declaration of Independence and the U.S. Constitution. Those things work. in addition to several key books that have been written throughout history that we glean so much wisdom from. The Old Testament, the New Testament, Adam Smith's Wealth of Nations, Milton Friedman's Capitalism and Freedom. There's so many good works out there that are just ignored by the general public because they're not aware of it. So I think the mission of small groups like this is to continue, despite enormous odds, to continue to get the word out. So that I began worrying about what Paul Ballou talked about, societal regression. And in his lectures, he would start with the long-term trend line for gross domestic product in the United States used to be 4%. And then in the beginning of the 90s, it was dropping to 2. And right now, it might be 1. And that's really due to 3 things, which Darren mentioned 2 of them: taxation, regulation, and the effects of litigation. And I call them the 4 horsemen of the economic apocalypse, and the 4th being inflation. So taxation, regulation, litigation, and inflation. All doing this to your long-term trend line. And the fact that your society is regressing. 70 to 80% illegitimacy rates in our... Yes, sir.
So I hate to interrupt your
please
train of thought.
No, absolutely.
But you did say you invited some discussion here. So
Yes,
just as an observer right now
Yeah.
of your talk so far, personally I'm getting a bipolar message here.
Yes.
The stock market looks good, and these are the reasons. Where's the best house in the worst neighborhood?
Yes.
And so the government is somewhat stable. I personally don't agree with that. And the analogy I like to look at is the leadership. Their main focus is maintaining their power. That's
Yes.
what they want to do.
It runs
And
on
I always
being
focus
reelected.
back to a cartoon that I saw of a cliff with a plank over the cliff, halfway hanging over the cliff, halfway on the cliff,
Okay.
with the citizens standing on the plank on the firm side of the cliff, and the government standing on the plank itself over the cliff.
Understood.
In other words, the people are what's holding the government up. And it's
Right.
quite voluntary. If the government degrades enough to where the people step off the plank and the government goes down,
Right.
that can happen very quickly. So it conflicts with your rosy scenario. I think that it's more perilous than you indicated. Now you seem to start to get into some more perilous things here.
And it is-
now, and
go
that's
ahead.
why the message I'm getting is bipolar.
It is bipolar.
Well, it's easy to. Well,
It is. And what it goes to in our industry as financial planners, in that in general, when you look at history, the stock market and the economy are not necessarily always in sync. So right now the market is going well because businesses got cash. You have multinational corporations that have a big reach. You fired everybody you could. You're hiring very selectively, and your productivity is an all-time high. Contrast that with what CNBC reported 3 weeks ago, that the labor participation ratio is at a 35-year low. So it is bipolar. You're spot on. And that's a problem, and that's why I'm very angry at this group that calls themselves progressive, when in general, there's more poor people than everybody before, and it's because of their stupid policies that
So
you have more poor
can
people.
you kind of address a way out? I mean,
Oh, I'm going
I haven't
to,
been
absolutely.
talking
Yeah, no, I'm done. Yeah, I'm
silver,
gonna, yeah.
hard currency or anything.
Yeah, absolutely, yeah, I'll get to it. But great point, and very astute, it is bipolar. Yeah, we're doing really good in some areas, but the fact that we're gonna be really bad is like the ants eating the elephant. Eventually, you begin to feel it. We have so many problems that must be addressed in a bipartisan manner that if these monkeys don't figure this out in 10 years, you're gonna have trouble, I mean, real trouble. And that's what eats at me cutting grass on the weekend. So yes, good point. So I am concerned about the long-term societal regression, as Paul Ballou called it in the United States, where you've got 70 to 80% illegitimacy in Detroit. You've got President Obama's chief of staff, Rahm Emanuel, volunteered to basically go back to Chicago and be mayor, and you have kids being killed at the rate of 2 a day. It's horrible. When you look at an investment in human capital standpoint, Much of your tax dollars goes to support the poor, so you should be very saddened when a young man or woman at 16 or 17 in the inner city gets killed because you've actually lost on your investment in human capital. I heard a statistic that more 27-year-olds in the city of Detroit were imprisoned than actually hired. That our city has gone from a population of 2 million in 1950 to 700,000 today. Man, that's got to end. So, but you can't do it, and I appreciate everything that the Hans Group is doing, trying to plant trees in urban farming, that Dan Gilbert's doing down in the city of Detroit. But unless you have solid families, you can spend money until the cows come home. It's not going to work. And we've been now conditioned to be so emphatically socially correct, but history is on the side, and it's not to disparage anyone, but history is generally on the side of a young man being raised by a father, because there's very few grandmothers that control a 16-year-old kid. And the most startling book that I have ever read, that I could read from but could not give the graduate students to buy, was a book by David Breuhan called Fatherless America. It's an appallingly horrific read about what happens when there aren't fathers in household. Bottom line is the boys will join gangs and the daughters will become pregnant. There was an interesting testimony, and you can Google this in the Wall Street Journal. There's 3 think tanks in Washington. Cato is libertarian, Heritage is conservative, and Brookings is liberal. And there was a senior staffer from the Brookings Institute that gave a briefing to a Senate subcommittee. And he said, in general, if you graduate from high school, get a job, and not get pregnant until you're married, you're probably going to be okay. If you violate one of those, there's a 60 to 70% chance you're going to be poor. If you violate all of them, there's a 99% chance that you and your children will be poor. This is Brookings. These are liberal think tank individuals warning Congress that unless you stop reinforcing undesirable behavior, especially in your inner cities, and you support the divestiture of basic families, those kids are going to grow up poor. And you have stratified poverty, again, on the margin. And this comes to the societal regression that I was concerned about going through graduate school. And that is, if you continue to give people money and keep them poor, and say they make $4,000 a year and they can keep $16,000 in benefits. But if they make $4,001 a year, they'll lose the $16,000 in benefits. So the marginal cost of the additional dollar is the loss of all their benefits. They will never work. Yes?
So to that, I just want to say that the leadership is not interested in curing poverty, in my opinion. That's a constituency for them. Hugo Chavez came into Venezuela on a populist constituency of the poor. So the poor is what lifted him up to power. And
Right.
What did he do? Did he make them richer?
No.
They're worse off now than they ever were.
Right.
So they're just interested in
They want their vote.
they're not interested in helping the people. They're interested in helping themselves. And that's a whole dynamic
Right.
that you got to change. That's not easy to do.
But Reagan got their vote. Now, he didn't get all the votes, but he got Macomb County, which is unbelievably historically impossible, and now attempting to carry Oakland County because the change in demographics is difficult for a Republican. So I think if you made people better off, you'd have to spend less money campaigning, and they would be more than happy to vote for you. So it's ironic that you have to keep people poor to get their vote. If you empower them, you get their vote even faster. So to me, as an individual in a free society, to see what goes on, it's just deeply saddening. But we have this, so point taken, and I agree, but you have this awful historical downtrend regarding where you're going as a society, whether it's out-of-wedlock births, whether it's illiteracy, whether it's per patient doctor ratio, whether it's the idea that we should be better off in Canada's healthcare system. I'm sorry, comparing Canada to the United States is like comparing Luxembourg to Germany. It's asinine. So you're going to put their system on our platform. What do you actually think the Canadians are going to do when we have their system? My wife's family is Canadian. They used to come over here and write checks when something was wrong. They can't come here anymore. What are you going to do? Plus Canada, God bless them, they're the best neighbors in the world. From what I understand, they don't have a 4-lane highway that goes from Nova Scotia to British Columbia because there's no tax base to support it. And that's where you are. So we're kind of going this way. I was very interested in the history of economic thought as it was taught. Love the book Capitalism and Freedom. And my intent, as I started reading all this and taking notes, I even started writing a book in some of the margins for my book. Because I was spurred to write to try to give you something, you who I had not met yet, something to chew on that might spur interest and some type of an American Renaissance. I wanted to have the impact of Adam Smith's Wealth of Nations. We West Pointers usually shoot way for the top. So I envision this thing that would take place. I'm sorry you trained me that way, to carry the day at Normandy and to liberate Bastogne. But I wanted that impact, but I wanted to be as brief as Thomas Paine's Common Sense. So the actual work is only 114 pages. It's a dense read, but it's fairly an easy read. My intent was to change modern economics, to change American domestic and foreign policy, and not to seek public office. So I'm not selling my book as a platform for public office. I really have no intention of running for public office because you're in a different environment now. So if I could be truly independent and not try to bribe you with your own money to vote for me, you'll be better off, and I'd be better off educating you and walking away. And if you could tell 10 people and they could tell 10 people and you could fix it, I'm happy to play golf on Friday afternoon. Truly, I'm happy to do that. I wanted to drive the Republic towards solutions, teach the country, not a classroom. I taught for Harry for 13 years, at night, sometimes 2 courses at the same time. It was great, but I wanted to take that information and push it on a national stage. And I used Washington and Grant as role models. Washington was selfless. He was a good listener. And when the war was over, King George said, if Washington resigns his commission, he'll truly be a great man. And Washington did indeed give his saber back to Congress and went back to Virginia to farm. And he was elected with 100% majority and no opposition. Most people don't know that. Grant was done, resigned his commission, and then ran for president. But Grant was very selfless, and he used to whittle while battles would go on because he would delegate authority. And I thought those 2 folks were pretty good role models in what me to not be involved in the politics of the United States. What's the thesis? The thesis of the book is accuracy and truthfulness. It gives you practical information that is applicable to the modern world. It's not some garbage $170 textbook that doesn't make sense that you can't turn in because the publisher is going to republish the next edition, so you just stuck the students with something that's useless, difficult to understand, and they can't get their money back. Boy, that's what econ's all about, isn't it? I view human beings as not secular but spiritual. I think that we have a non-linear concept versus linear. Most of these knuckleheads in Washington and in major universities think in a linear fashion. You have to understand human action. You have to understand that markets anticipate future earnings. So yes, Ben Bernanke and Milton Friedman, you're wrong about the Smoot-Hawley tariff causing the market to crash 8 months before it became law, because if you told me today as a money manager that you would impose tariffs on 25,000 goods and services coming into the United States 8 months from today, and that for sure 8 months from today it would happen. And oh, by the way, your trading partners would retaliate against you, in some cases with 100% tariffs. I would tell you tomorrow the market will crash, even though the bill has not become law. And that's what Friedman and Bernanke do not understand. Bernanke doesn't even touch on it. Friedman in Capitalism and Freedom said, I acknowledge this, but that bill didn't become law until June of 1930. The market crashed in October of 29. The two are mutually exclusive. The Nobel laureate is wrong, and my research proves it. I look at the history of what works and what does not. I look at free trade is necessary. It's difficult in a union state. Now, my father worked for the United Auto Workers for 48 years at General Motors. My dad was, yes sir?
There's going to be, we have no control over this, there's going to be an Irish band that
In
starts...
10 minutes, I'll be done.
Well, it starts at 8.
I'll be done.
So, okay.
Yep, we're good. My dad was in the UAW for 40 years at GM, and what shocked me when I was a 15-year-old boy, he said, you know, the best thing that ever happened to General Motors was a Toyota Corolla. He's a union man. I said, really? He goes, yep. It forced us to compete. Honda and Toyota made us go to a transverse mounted engine, front-wheel drive transmission, lighter steel with a third of the employees, and made General Motors a better company. They went bankrupt because of their legacy costs, but my dad was right and he was a union guy. I like stable and honest currencies. I think all the ideas that work have stood the test of time. And Harry Reiser taught me a very interesting word from the Greek, logos, that the United States works because we have adopted Western civilization's idea of order and reason. Order and reason. That's who you are as a civilization. And it's very important. And if you don't think so, look around the world at disorder and lack of reason. Some people can't wait to be insulted. I won't say who, but at the drop of a hat, you do anything, they're angry for months. Other parts about the book, I look at trade policy. I have linked our trade policy from 2002 to 2004 with the steel tariffs and tariffs against Europe. Directly impacted the stock market, just like Smoot-Hawley did. That's original research. Nobody has done that I know of so far. I look at the national debt. Yes, sir?
I'm not completely, I've heard of, but I'm not completely familiar with the tariffs with the steel market.
Yes.
I would be very interested if, just for our leader or two, you could wax eloquent and expound upon and explicate that. The difference between tariffs went up, and my understanding is that the steel market, the steel industry just died, basically in Ohio, Pennsylvania.
Not the steel industry, manufacturing did.
Okay.
So what happened was, the Bush administration bought votes with the steel makers and the steel unions. And they said, we're going to give you protection so you can invest and develop your plant, property, equipment, become more technologically efficient. And in the meantime, we will raise the price of steel coming into the United States by 30%. If you look at the actual price of steel, it went up 90% in 7 months and crushed manufacturers. Steel tariffs took place in March of 2002. Lumber tariffs against Canadian softwood lumber took place in May of 2002. Most things are made of steel and lumber. The market tanked because input costs in the United States went way up, and many people who consume it already signed contracts to buy it. They didn't pass the costs along to homeowners and their end users, and they were caught in the middle. It was devastating. I wrote a whole chapter on that and testified in front of the International Trade Commission. The woman who was in charge of the International Trade Commission, the chairwoman, when I presented the evidence, laughed at me.
Were you that funny?
I didn't think so. And I was there on my own dime. Yes.
I'm with Sal because I see us monetizing debt, and I see us producing new dollars in a way that it seems that the very same credit bubble that was inflated artificially previously is being inflated again.
Right.
And I certainly understand that the market indicators that show that they're heavy on cash, they're profitable, and they're running lean.
Yeah.
But are we really at the point now where we can't foresee the currency crash and we cannot see the end of our debt problems? How do you envision it? And is it really now just a matter of getting out the day before the market crashes Or are we at a point where we're able to track inflationary pressures and chart those against the gains on Wall Street?
Like I said, I think there's more risk short-term in the bond market than the stock market. I think the biggest bubble, if there is one, is in government securities, simply because so many people own them, including major mutual funds. I see the dollar weakening, but I still don't see anybody substituting themselves, including gold, because nobody wants it, because gold regulates. A lot of people say you libertarians aren't for regulation. Well, I'm for regulation. Let's start with the currency. Now, you can't go on a gold standard per se, because there'd be a run on your gold stock, you'd lose it in a day. But you can certainly say, look, I'm going to adjust interest rates as long as you've got this Fed that's not going away. They could look at the price of gold and the marginal cost of mining and say, we're going to raise rates until the price of gold, which is $1,300 an ounce, actually drops to the marginal cost of gold, and that would probably slow things down a bit.
Well, then why do we see the price of gold drop so dramatically, even though the quantitative easing continues?
I think a lot of people sold it a couple of years ago. The bottom line base price right now to me, because the Indian Central Bank, a lot of central banks bought gold at $1,100 an ounce. It's probably pretty good support. But a lot of people 2 or 3 years ago blew the gold market out because it was the only thing they had a profit in. And the hedge fund and a lot of the pension managers said, look, we bought it at 600, now it's worth 18, let's take a profit. I mean, it's been in a pretty decent range from 1150 to 1300 for a couple of years. I don't think it's going to go below 11, I don't know, but I think there's pretty good support at 1100 an ounce across the world.
But if that's the case, then you see a stability in the gold price. Why would we think that there wouldn't be some other pressure then that would manifest itself in some other way if we continue the quantitative easing?
I don't know, because these papers that 2 people wrote a couple of days ago on the Fed board, and this number 2017 came out, a lot of the Federal Reserve Board of Governors and Presidents don't like QE, so they're thinking they may do something else. Not tinker with rates, not do QE, but there's something else out there that's being discussed to push this thing out to 2017. So it's a good point.
So you're suggesting that maybe when you have all the trouble, somewhat smooth sailing, even with...
Well, I don't foresee the dollar collapsing simply because there's no other alternative that I know of. And secondly, the Federal Reserve is telegraphing what they're going to do. So, I mean, it's like Obamacare. Please, just tell me as a business owner or a CEO of a Fortune 500 company, please tell me what exactly you're going to do, even if it's bad. Because I can deal with that. What I can't deal with is, okay, we're not going to do it today. Or here's a 50-minute speech on Syria on why we're going to attack, and 2 minutes about, oh, never mind what I just said. Or now we're going to stop QE, get ready, and 3 months later, oh, never mind what I said, we're going to continue QE, and you destroyed the bond market, and people lost money, and you said never mind, and now it's back to where it was. Just make up your mind, make a decision so we can deal with it, and move along. I don't support it, but even if it's bad, please tell us what you're going to do. Please, because nobody knows what you're going to do.
And we also know...
Yeah.
But how long do you think the world is going to exchange their raw materials and their labor for green pieces of paper that we print out of thin air?
Until somebody comes up with a better alternative.
You're almost forecasting a complete collapse before you would...
No, like I said, I see 4 alternatives to the dollar. Okay? Swiss franc, Chinese currency, the yuan, or renminbi, whatever they call it, Australian dollar, and the Canadian dollar. And then gold. Right now, I don't see any way for any of those 5 instruments to be accepted globally like the US dollar. What I think foreigners are going to do, and they do it all the time, is they're going to demand more dollars for the same thing.
What if China backed a portion of their paper currency with gold?
Never happened.
You don't see that?
No. They're communists. They don't get it.